Everyone who's here, welcome to our webinar tonight. I'm really excited. This is our first webinar of the year. It's going to be talking about rising interest rates in our country, in Canada. I'm very excited to have you here, Farhan. Farhan's been a mortgage broker for years here in Ontario. He works with investors, which is why I brought him in, because he himself is an investor. He's experiencing the market as we experience it, and he's here to talk about, rising interest rates and how we can navigate that situation. In fact, I think he's even going to talk about how to take advantage of the situation we're in to make sure that we are putting ourselves in a good position as investors or just buyers who are looking to buy a property. So without further ado, Farhan, I welcome you to tonight's webinar, and I'm looking forward to learning from you.
Well, thank you so much, Joseline. It's an honor. It really is. And I'm really, really excited, especially the first webinar of the year. It's very exciting. Finally, the weather is not today, but generally it seems like it's on the warmer side. Everything's getting a bit better. So I'm really looking forward to going over some of the changes which are coming along, as well as how it's creating a lot of opportunities for multiple people, especially people who are not able to get into the housing market. Now they do have a chance to get into the housing market. Investors who have been struggling to get into good deals, seems like finally those good deals are showing up and there is opportunities coming for everyone to see. Jocelyn, before I get started, I want to take what do you think? Where you think the last 3-4 weeks have gone in terms of real estate, especially when we see the real estate of Southwestern Ontario, because I see you trading so much more real estate. What trends are you seeing as a realtor?
So right now as a realtor, the trend that I'm seeing, and I was just talking about this, I had 5 listings last week and they were all just sitting on market. I think what's happening is as soon as they announced the rise in interest rates and everything that's happening with the war and all the uncertainty that's happening, things slow down a little bit. So instead of seeing 20 offers on offer night, we're seeing 5, 3. In some cases, we're not seeing any offers. So that happened for about 10 days. And then things started picking up again. But at the same time, I was also tracking the level of inventory. When they announced the change in interest rate, we had about 150 homes on market in Guelph. Usually in January, we had about 40. So we had 3 times the inventory that we had in January. So it was expected to see some slowdowns. And now some of those homes are selling and the inventory level is going back down. Right now, as I'm speaking, 4 of my 5 listings have sold, which is a good thing. So I think that the market is, reacting to the announcements that the governments are making. But at the same time, I think we're not seeing declines in prices, because these listings that I sold in the last 3 days, they all sold close to market, right? So I'm kind of waiting to see what other people are experiencing. But on my side, I'm seeing maybe more days on market, but not a reduction in prices. What are you seeing?
Same thing. I see that, instead of property selling in 2 or 3 days, now it's taking maybe about a week to 2 weeks, but there is no reduction in price as of right now. As the market, more supply comes into the market, which is expected as the weather gets warmer, more and more people will be listing their home on the market. We might see a small correction in the market, but in my mind, I don't see anything more than 5 to 10%. Where I do see some opportunities is that, unfortunately, one of the things which a lot of people did was they had such a big fear that they won't be able to get into a bigger home. So a lot of realtors, they advise people to buy first before they sell. We saw that advertisement all over the place. We saw a lot of realtors, guaranteeing people that their home's going to be sold at a certain price. And so a lot of people have bought and they have starting to list their home. And now we are seeing a lot more inventory. So we might see some great opportunities. Time to time, obviously, some really, really amazing stuff comes through. But generally, overall market, I don't see it going anywhere. I think it will remain pretty stable. Now, what happened in 2020 and what happened in 2020, that 21, that the market took a 20%, 25% increase, I don't see that increase either. I think it's going to be more of a year which is going to be calm, relaxing. Prices are going to remain where they're at. They're not going to go up and they're not going to go down. And market's going to stabilize itself. That's from where I'm looking at. And obviously, it impacts investors, it impacts homeowners, it impacts people who are thinking to go into housing market. It impacts every single person. So Joseline,
Absolutely. Yeah.
yeah. So Joseline, that's my take on it. And we have some great advice today. What should you do as your next steps going forward to it? And Joseline's gonna just walk us into it a little bit, that you forget about you being as a realtor. You are also a really, really good investor. I have seen you make a lot of money for yourself in the
Thank
past
you.
few years. What do you see happening now, and how do you think you can take advantage of it as an investor?
So for me, as soon as this started to happen, I was thinking I need to connect with all of our clients to let them know this is a window of opportunity. And as I was just saying a few minutes ago, there's a saying that goes like, you have to zig when everybody else is zagging. In times when nobody is buying, as an investor, that is the time that you should take advantage of the market, because usually you have more options, you have less competition, you have the ability to be able to get creative even with the terms that you're asking for from the seller, because they have no other buyers on the table. So I think as an investor, for those who are in the time where they're still doing acquisitions, I would say position yourself to be able to pick up some deals right now where things are slow, because the market we had in January was much different. It was so hard to negotiate with the seller. You just have to take the terms that the seller is presenting on the table. Now, if you're the only person on the table, you might be able to get away with a few things. So I think for an investor, for sure, this is the time. Absolutely, this is the time. And what I've also learned in my time as an investor is that windows like these don't last long, right? It's not going to be around for a long time. In fact, on average, we've seen that these windows will last about a month or two, in some cases, 3 months. So this is a good window of opportunity for those who are looking to pick up deals. We do see like a dip in a curve and then starts going back up. Right now, we haven't seen March statistics because today is the last day of March. Maybe tomorrow is the last day of March. So we haven't seen those dipping statistics yet, but because we're in the market, we're experiencing and we know that we might see a dip in the prices, or just minor things happening here and there, but it's a good time. We might see a pickup in inventory. It's a good time for investors to definitely buy something.
You're right, Jocelyn, absolutely. And to be very honest with you, it can turn the other way around too tomorrow. Suddenly, some positive news comes,
Yeah.
and the market can start taking again, go back to all those multiple offers and that
Yeah.
situation. So again, more than what market is doing, I'm a big fan of making your own individual goals, right? Like, what do you want to do as an investor or as a homeowner? Like, what are you trying to achieve? And forget about timing the market or looking at it where it is at this moment, where it's going to be in a month from today. To be very frank with you, nobody knows. No one has any idea. All you can do is, people who lose money in any markets, and it could be the stock market, could be the real estate market, are the people who are not patient. If you're patient and you wait and you go through the cycle, you're going to be fine. I have had a lot of clients who bought properties at very high prices in 2017. And on that time, they thought, oh my God, we paid 100,000, 150,000, more than the market price. But you look back and now you take a look into it, those were amazing, amazing deals. I would buy that property at that price all day long. It's
Yeah.
just the perspective, it changes with the time. So your individual plan has to be there on what you want to do, and your group of the professionals you work with, your realtors, your mortgage brokers, the lawyers, accountant, you need to make sure that whatever you're planning to do, it's feasible to do, and you go accordingly. Okay, so
Absolutely.
I want to step into a bit about market overview of what's happening in Ontario in March of 2022. We have seen, number one, Bank of Canada increasing their interest rate from 0.25 to 0.5%. It makes some difference on the mortgage payments. There is some lenders who actually increase the mortgage payment, and there is some lenders who increase the amortization. So some clients might have seen their payments going up a little bit, others might not have seen that. But what it creates, it creates a lot of uncertainty in the mind of a homeowner. And the first thing they want to do is jump over to a fixed rate mortgage to make sure their payment does not change and they are not paying the higher rate. I want to tell you the biggest horror stories I have heard, and doing this now for almost 10 years, are the people who have had fixed mortgage and they had to break it. I have at least 4 to 5 clients crying right now because their penalties are north of $20,000 because they chose a fixed rate mortgage and then they had to break it for whatever reason, marital breakdown, sale of a home, whatever the case is. The penalties on fixed rate mortgages are so high, and that's where you do need a professional to make sure that if they're set, you're going into a fixed rate mortgage, you're going into a product which is right for you, because life changes so rapidly that you don't have time to adjust. And a lot of time I have seen people's full equity being eaten by the penalty on their mortgage. So you have to be extremely careful before you just lock in your rate. Please pick up a phone, call your bank or call a professional mortgage broker and make sure you have a conversation with them and tell them that this is what I'm trying to do. And for heaven's sake, don't believe what you see in the media all the time. It's not always the best advice. In fact, I have a very good investor client of mine, and I have seen him to do complete opposite of what the media suggested. So remember when the COVID started, including myself, I got scared. I sold 3 or 4 of my properties quickly because it was such a big thing. And I saw him buying like no tomorrow, because he just likes to do the complete opposite of what media is telling. And he has done so successfully run his business. Now, obviously, we cannot do silly things, but generally, media's advice is generally not the right advice. By the time it gets to you, it's too old. You need to be up to date. So don't just lock in a rate and think that you're going to be safe. Now, Jocelyn, you have had experience with variable rate mortgages, fixed rate mortgages. You have a terrible mortgage broker who has put some policies in place for you. What has been your experience? Because I know very well that you have had variable rate mortgages and fixed rate mortgages. As a consumer, what has been your experience so far with them?
So starting out, like everyone says a fixed rate mortgage is better and everyone listens to that. So when we started, all of our mortgages were 5-year terms and they were all fixed, can't change anything for 5 years. And guess what? None of those ever came to maturity. We always had to sell, refinance, do something within 3 years or less. So I think what I've learned is to just have a variable rate mortgage, because it's not that bad. I think I've had to experience that and learn that and overcome that fear, because a lot of the times when you're out there, like as a beginner or as a just, intermediate investor, you think that there's an advantage to having a fixed rate 5-year term, but that's not the case. Yeah.
That's absolutely right. And again, by no means we are promoting variable rate mortgages and you should only have variable rate mortgages. That's not our intention. If you're retired and you have fixed income and you have been living in your home for the last 20 years and you have no plans of moving, fixed rate might be a best option for you. But if you are just getting started and you're buying your first home, fixed rate might not be the best option for you, because statistically speaking, more than 80% of the mortgages, they don't last 5 years. Okay. Almost all of my clients, in 2 to 3 years, something happens. They need to finance a new car. They need to build in a basement. The roof got damaged or something happened in their life, and they need to pull out equity from their home. Now, again, there is ways to set yourself for success, but you have to work with a professional who can design a personal financial plan for you, and you can go accordingly, and have some basic understanding of both variable and fixed rate mortgages. I love that CMHC ad. I don't know if you guys have seen it. It's been on social media all over the where they have a baby with variable and fixed rate mortgages. Quite frankly, my daughter is quite proficient. She knows both. 6-year-old girl, she can tell, oh, this is fixed, this is variable. It's not that complicated. Just take 10 minutes to educate yourself the difference between both of them. And depending on your lifestyle, pick the right option for yourself. We're gonna go into a bit more like what should you do as the rates are going up. What should be some of the strategies you can put in play? What should be some of the uh, plans you can do? One of the things which I always highly recommend my client, especially when they have a variable rate mortgage, is my recommendation is treat it like a fixed rate mortgage. So day one, start thinking of a higher mortgage payment than what you are paying, and put that in your cash flow instead of a lower payment. So imagine if you take a variable rate mortgage and your interest rate is 1.6% right now. Fixed rate mortgage is around 3.5, 3.6% at the moment. Calculate in your mind everything at 3.6% and make a payment accordingly. And if the payment goes up, then your payment is not going to go up. Your payment is still going to remain lower, because the interest rate is not going to jump from 1.6 to 3.6 immediately. And the probability of it going, 2.5, 3% higher, can it happen? Absolutely. But probability is very low. It will bankrupt not only a lot of household, it will also bankrupt a lot of businesses, which are crucially dependent on the prime rate. So again, depending on your situations, set up a plan, pick up the phone, call a professional, uh, tell them that, hey, listen, this is how much income is coming in and how much of my mortgage payments are. What would be the best plan I can set up for myself? It could be that, we start making an emergency fund on the side, which you have in case if the payment goes up, you can substitute from that emergency fund. It could be possibly looking into an option of increasing your amortization. I had a client who called me about a week ago, and he was really concerned because his payment went up, I think $43 per month. But that 43 for him was a big deal. I know for a lot of people it's not, but for him it was a big deal. What we were able to do, we were able to tweak his amortization, increase his amortization a little bit, and that dropped his payment by more than $100. Um, Also, there are other options which you can explore to make sure that your payments are you have the ability to afford that property. Jocelyn, is there any of these tactics you have used for yourself, especially because you own your own home, you own multiple rental properties? What have you done personally to kind of protect yourself against high rising interest rate?
Farhan, that's a good question. Now that I'm thinking of it, I know we do have some variable rates, and we do have some fixed as well. We do have some short-term mortgages, long-term mortgages. I think I like your idea about having some money aside, such that if worst case scenario, it goes to 3% or 5%, you can still afford to pay the mortgage. More importantly, I find a lot of our properties have really good cash flow, such that even if the rates were to go up, the income that's coming in from the property is sufficient to cover our expenses, even at that higher rate. So I think that's probably one of the strategies that we've implemented.
And that's critical. A lot of time people buy property on the face value. They don't think of it, what will happen if the interest rate went up by 1%, right? Um, and quite frankly, interest rate is not as big of a deal as people make it. I've been working with multiple investors over the last 5 to 10 years, and what I have seen is that it's only in your mind that, oh, my interest rate is this much. If your payment is less, who cares, right? Like, might be sometime the better strategy is to have a longer amortization. And this is also happening. There is a lot of financial institutes which have gone back and they are providing 35-year amortization. Um, so if there is someone who is struggling with 20 or 25-year amortization, might be a good idea just to switch the mortgage to a lender which offers a 35-year amortization and see if they can save on that monthly payment, and it's easier to cash flow. So again, the what really matters is what your monthly payment is, and that's where a lot of us need to focus on. um, Going back into talking about myself, quite frankly, I don't pay attention to my interest rate. Whenever I am buying a property or I'm selling a property or I'm looking at an investment, um, people focus so heavily on cap rate and this and this. My always looking at a property is the potential of it. What can I do with it, right? What am I getting a good deal today? Forget about tomorrow, right? Could I make it work in a manner that if the a lot of things go wrong, can I still afford it? So that those are basically how I want you guys to kind of start thinking and start training your mind. And don't panic. Like, I have seen people make such dumb decision because their coffee went up by 10 cents or the gas prices went up by 20 cents, and they think that the world's gonna end. Nothing's gonna happen, supply chain issues, all the things which are happening in the world. Yeah, well, e- everything is bound to get a bit more expensive as the time goes on. That's why there is inflation and so on. But don't make it a big deal. When people start making it a big deal, especially on things which they have no control over, that's when the lot of personal challenges starts coming through. um, and that's why I want to kind of transition into inflation. uh, Jocelyn, you were traveling. You went down south, which I'm really jealous about. Beautiful beaches and so on. And you've been traveling within Canada as well. You have seen the prices of goods, fuel, everything rising. What's your take on inflation and how you are tackling it, not only as a consumer, but as a realtor as well?
That's interesting question. And you know what? I have noticed that things have gone up. And when you go down south in the United States, their dollar used to be par with our dollar 1 to 1, but now it's no longer the case. So you're buying things at prices that are fair to them, but when you convert to Canadian dollars, it's not the same. But to be honest with you, it doesn't surprise me. You know why? Because I come from an economic background. So when COVID started and the government's printing more money, the government is, obviously helping different companies that needed it, or different individuals that need the support from the government. I knew that that would result in inflation. That is always the case. When the government pumps money in the economy, inflation has to happen. So I'm not surprised that it's happening. I'm just kind of waiting to see what will happen. If at all it will be corrected, I think it will just become the new normal. That's what I'm thinking, that this is just our new normal prices. I don't believe that there'll be a correction at all. But, who knows?
My take on it is what we have seen in the last 3 4 years, that's not normal. What's happening now is how things supposed to be. We were at a point where interest rate was literally next to nothing. There was not a lot of room for investors and so on. But as the economies, not only in Canada but all over the world, they are opening up, we're gonna suddenly see the prices which did not rise in the last 2 3 years. They're gonna see a big increase in them. And it might seem like, oh my god, just now the price has gone up. No, it hasn't. It's the impact of the last 2 3 years which is coming into effect. Few sectors which are gonna remain way well. One of them is real estate. But the reality is we are not building as many homes as we need. There is so much red tape from authorities, from builders, from construction, from material, um, from wildfires to supply chain issues, that there is just not enough supply to, not enough supply to take care of everyone. And and all still there is a lot of immigrants coming into Canada. There is a lot of people who are coming back to Canada as well. who were away due to COVID, they had the ability to work from home or from another country. We are seeing those people coming back. And my prediction is that we're going to see a much more increase in prices in Toronto or big cities as people go back to work. They have not seen the kind of increase these rural properties have seen in the last few years, just because everybody had the ability to work from wherever they wanted to. And now that's changing. Employers are calling their employees back to the head office. We Will we go back to the culture of pre-COVID? Absolutely not. But we're gonna see a more of a hybrid economy and a hybrid model getting developed in the next 3 months to a year, where people will be heading back to that way. Jocelyn, what do you are you seeing a lot of your clients going back to work as well? Or is it only my clients who almost every second day I'm getting a call and they're saying that they will be going back to work, so they're thinking of getting something closer to their work?
So a lot of my clients are working. I'm sorry, I can't put back my video. I think it's says the host is not on, but that's okay. I will figure that out in a moment. But yeah, a lot of my clients are still working from home. Before Omicron, a lot of companies like the City of Toronto and other bigger establishments were asking people to come back to work. So arrangements were made for people to go in the office twice a week or 3 times a week. Right now with Omicron, I'm not seeing a lot of that. I'm seeing people being at home and kind of waiting to see what else will happen. Now, all the mandates have been lifted, right? Well, maybe not all of them, but majority of them, especially the masks mandate and, so maybe that will change things down the road. But right now, as we speak, a lot of my clients are still working from home.
Makes sense. I'm seeing, especially in the last 2-3 weeks, I have seen a much bigger shift in people going back to work and things changing in that sector. So again, going back to our conversations, let's say if you're just a homeowner, you own one home and your renewal is coming up, you have multiple options in front of you, variable rate, fixed rate mortgage, etc., etc., etc. One of the questions I get to ask quite a bit is, what should I do? This sounds like a difficult decision, so on. My answer is, like, if you are not looking for more money, if you are happy with the lender with you are, don't make a change. Honestly, a lot of time it's not worth it. The best thing you can do is stay with the same lender you are at, as long as they've been nice to you and you've been nice to them. Negotiate the rate, and depending on your situation, either take variable or either take fixed. Okay. Unless there is some big changes you're seeing coming into your life, in my mind, you should renew your mortgage with the same lender. Is there some exceptions to it? Absolutely. I have had a client call me a couple of days ago and he told me the rate his lender is offering him. And I told him upfront, I'm like, I can get you a way better deal outside of this lender if you want to switch. But in most cases, the lenders, they have a much bigger incentive in retaining that client. So they will offer you a much better deal if you just stay with them and complete another term with them. So that's what I would recommend, that unless stay with the same lender, don't make a lot of changes. They are expensive changes. Yes, lenders do end up covering some of the cost and so on, but it's a lot of hassle and a lot of time it's not worth it. A lot of time it's also not worth going into a 5-year fixed rate mortgage. People have this understanding, oh, we bought this perfect home, we're going to stay here for the next 5 years. Maybe or maybe not. Maybe going for a 2-year or a 3-year fixed rate mortgage might be a much better option, depending on how the penalty structures are set up, than taking a full 5-year fixed rate mortgage. Life changes very, very rapidly, and you have to make decisions as things come through. And especially in the economy where we are at, my parents stayed in the same home pretty much all their life, but me and my wife, we have moved I don't know, 5 to 10 times since we've been married. And it's not only us, it's a lot of people which we are seeing nowadays, that their circumstances change much more rapidly than what it used to be before. And that's what be my recommendation is: avoid making emotional decisions just be based on what you see on the paper. Pick up the phone, call a professional, call the bank you are with, have a discussion with them before you make any big change, and go accordingly.
I have a quick question here, and I think
Sure.
it ties into what you're saying right now.
Mhm.
The question is it possible to refinance 6 months after purchasing a home?
Yes, it is. Now it
Okay.
depends on the lender you're with. So the good news and the bad news is this: the mortgage which you got set up, it makes all the change.
That's true.
Also, if you have found, like, I'll give you an example. I had a client who bought a property 6 months ago, and then they got an opportunity to buy a rental property at a much better prices. One of their neighbor was selling the property, and they had this amazing opportunity to buy. Uh, the house they bought in 6 months ago was for about around $800,000. We got it reappraised now, and the value came back at $1.3 million. That
Wow.
part of town, just to share, that was Burlington, Ontario. The property values have exploded in the last 6 7 months, and they were able to take out quite a bit of money and buy that rental property. Also keep in mind, there are lenders who will lend based on appraisal value, not on what your purchase price is. Not the major banks, but there is a lot of smaller lenders. So I'll share this example with you, because we just set up a mortgage for someone a couple of days ago, where they had bought a property from a builder for $650,000 in Guelph, Ontario. Now, 3 years later, the property is closing, and the property appraised at close to $1 million. They were able to get financing based on the appraisal value, not on the purchase price. So instead of, them paying money to the builder from their own pocket, they were able to close this property day one in a situation where they actually made money out of it. Now, to be clear, this was an investor. His goal was to take out maximum money as they could. Their goal was not to have a very small mortgage and pay it off. And these lenders are a little bit more expensive than bigger banks, to be honest with you. But depending on your situation, it can be a very good situation. Also, a lot of time people get completely scared off that, just because their affordability ratios are not in line, they are not able to buy a rental property. There is a lot of lenders who basically do the calculation of a rental property based on the cash flow it's generate, not what their personal income is. So again, you need to have contact of a professional broker who deals specifically with that area, um, who can guide you through it and find a solution for you, because there is ways to get it done without putting yourself in trouble, and without and losing hope. That I see a lot of people, they are completely hopeless that they're not able to buy anything. That's not the case. There is ways you can um, definitely get into the market. Jocelyn, I know you has seen a couple of those situations, where people have felt very hopeless, and you have seen them getting into the housing market. Can you share any story or anything, not taking clients' names or anything like that, how they were able to do it?
Absolutely. And again, I apologize. It looks like I can't put my video on, but I hope you can hear me clearly. What I tell my clients a lot of the times is, look, we only need one property, right? There's probably, let's say, maybe right now in this area, there's 200 properties on market. Not every single one meets the criteria of what you're looking for. But if you think about it, we're not really looking for 200 homes. We're only looking to find you one home. And I find that when people get really clear about the kind of home they're looking for, it's much easier for us to go out there and find it. The only time where people get discouraged is if they're looking for something that's unrealistic. For example, if you're looking for a bungalow for 500,000 in Ontario, Southern Ontario to be specific, that is probably less likely to happen. In that situation, we don't even get to go to market because I'll let them know ahead of time that, look, this is not going to happen. But for the average person who's looking for a decent home or even an investment property, they know their numbers. They know exactly what they're looking for. We only need to find you one of those. And there's 200 of them out there. So we'll go and find it.
Yeah. And again, in each individual person, they have a different situation, right? And each one of them have a different unique position. One of the thing I love about mortgage business and being a real estate investor is I haven't met two exact same situations. Is there similarities in clients? Absolutely. But generally, each situation is unique, and that really helps me to, turn a chapter. And every time you are dealing with a new challenge, which is very exciting. And that was actually one of the things I did not like when I was working on the lender side, is pretty much every file might got to my desk. I did not have any personal stories. I did not have any details, and it looked like the same thing. But the benefit of being on our side is that each thing is different. So reach out to someone professional. Again, I know I'm saying that a lot, and make sure that they can set up a goal. Couple of changes which we are possibly expecting to come in the marketplace in this summer is that you will no longer be able to use borrowed money towards the down payment of a rental property. Now, it's not been announced. It's just something which has been suggested by few authorities, but there is a high probability that this will come into effect. Okay. You will need to pay 35% down payment on a second home or rental property. You are no longer allowed to use borrowed down payment um, for rental purchases, which some lenders already don't allow it. Some of them do allow it. Um, and again, as we do progress through this year, there is a possibility that they might start taxing people on their principal residence if they're making a lot of changes. We don't know the details, but these are something we do expect which are coming into effect in future. Like, we were all expecting the foreign tax to go into play for all over Canada, because outside of GTA, the market prices went absolutely crazy up. Um, Take a look into Woodstock, London, Ontario, Windsor, Ontario, Sudbury, Ontario, anything on the east side. The increase is astronomical compared to what it is in GTA and core GTA. And one of the main reason could possibly be that those areas were not foreign taxed, but going forward, they are going to be foreign taxed. What that also does in my mind is it also opens up opportunities for people to buy into major pockets, and they might appreciate more now that because everyone is getting taxed the same amount. So there is a bunch of opportunities which I feel like will come through these changes. Joseline, I know we are already talking about doing a webinar on foreign taxes. Do you see any big major impact of that on our markets where we are dealing a lot?
Yes, I do see that. And when I read that story like yesterday, the first thing that I thought about was exactly what happened in 2017. Because as you can remember, 2017, the market was doing really well, multiple offers, bidding situation, just like we were in January of 2022. And then they introduced the foreign buyer tax, and the market just took a hit. Like there was some correction for sure. In some cases in 2017, we did like 10 to 20% correction, especially in Toronto. So I am thinking that we might see some of that happen again here in Ontario this year. And I think my main concern also is that we were just adjusting to the rise in interest rates, and now they're bringing this. So I do see maybe a little bit of a reaction to the market in the short term, maybe not much in the long term, but definitely in the short term.
I agree with that. Now, Jocelyn, I think that that might not happen. What happened in 2017 was also the stress test got introduced. So suddenly someone who was making $100,000 income, who could have take a mortgage of about 650, $700,000 with that, they were only able to take a mortgage of about 450,000 dollars. That was a huge blow to people with that stress test. The second thing which also happened on that time was few of the mortgage lenders, they went under, and suddenly the
Mm.
capital froze from the market. I'm not seeing any of that happening. In fact, lenders are much stronger today than they were 3 4 years ago. So
Yeah.
I do see market pricing being stable. Might be a slight drop, but I don't see any of that as of right now. It might change again. Had I, if I knew the future, I wouldn't be talking to people. I would be somewhere in South enjoying on a beach, right? But the reality is, at least what's happening is, seems like most of the mortgage lenders, they're in a very strong position. The default rate is next to nothing at the moment. Um, I don't see drop in prices personally, but let's see what happens as the time goes on. There might be a small correction, but not much.
Yeah.
I want to jump into a bit of regulation sides. What we are expecting this summer is that private lending will be regulated a bit more. Right now, one of the reasons the market was going the way it was going was private lenders were lending with absolutely next to no, with very little to no due diligence, right? They were lending very aggressively. I do expect within this year, we're going to see some more regulations come into effect for private lenders. Only few brokers would be able to do private lending instead of everyone. There would be special licensing for it as well. Uh, Again, we don't know the exact details of it or when it's going to come into effect, but I predict that at some point it's bound to happen, that that's going to come into effect. Another thing I see changes coming through is assignment sales. And honestly, I'm so sick and tired out of assignments. There has been so many investors, all they do is they buy something from a builder, and before they close, they sell that property to someone else at a much higher price. We have a bunch of investors here with us. Let me be very clear with you guys. It's hell to close assignment deals. It's not a lot of fun. Okay. They are much more complicated. Lenders don't like them. There is a bunch of lenders who don't do them. And it's a stressful situation for every single person. we I feel like we're going to see more regulations which are going to come towards assignment sale, and that's also going to bring some amazing opportunities for investors, because there's a lot of people who have bought properties from builder with absolutely no intention of closing it. Their goal is to sell it on assignment, and when they're going to realize that they're no longer going to be able to get the optimal price they were hoping for, they might take some hits, which is a good news for homeowners. And other investors who played the game more cautiously. Um, I do time to time see clients which, like I'll give you an example. I had a client come in and he's bought like close to 15 to 20 properties and he has no intention of closing them. In my mind, that's stupidity. It really is. Because when you sign that dotted line with a builder, the builder does expect you to close. And if you don't close, not only you're going to lose your deposit, you are also uh, opening yourself up for a lawsuit and a bunch of other charges, which when people are signing the agreement, a lot of them don't think about it. So there is more regulations coming in that area. In my mind, at least I'm preparing my clients to be prepared that there is few of those which we do see changing in the next few years. Jocelyn, I know assignments are one of the things you have dealt with a little bit. What has been your experience and what do you think will be changing in the near future?
I agree with you that, builders right now, like they've been very busy with a
Mhm.
lot of people requesting, wanting to buy those new builds. So I do agree with you that we'll definitely see a lot more new assignment sales. With the assignment sales I've done, you're right, they're very complicated. Um, a lot of the times it requires that the buyer has cushion in terms of down payment. So they can't just have 20% and hope to close on it. In fact, if one of my clients or any of my clients are buying assignment sales, I always like to know if they have more funds. If the lender chose to finance it at the original purchase price, could you cover the difference? Right? So those are kind of situations that, questions that I'll ask my clients, because I know that it could get pretty complicated.
You're right about it. And
Yeah.
I have seen people losing, including myself. When I bought my first assignment, I had absolutely no idea. On that time, the realtor I was dealing with, he didn't bother to explain me anything about it. He's like, it's just like buying a normal home. There is no big deal. And this is 2011, by the way. So it's been a long time ago. And to this date, that was the most stressful closing I had to go through because it was an assignment sale.
Yeah.
And I don't recommend it unless, like, somebody has a very large down payment. They are in a situation where they can figure it out to maybe close it on cash. Assignments are very, very challenging. And as the time's going to go on, they're not going to become easier. They're going to become more harder, unfortunately. So be careful. Don't buy from a builder with an intention that you're going to sell it on assignment. In fact, fun case study. A couple of weeks ago, one of our client, he bought an assignment purchase from one of the sellers. A week before closing, the builder wasn't responding. A week before closing, the builder declined that assignment sale. So the whole deal fell apart. It became such a big nightmare for the people who sold, because based on that sale, they bought something else. The buyer had expectation to move into the property. But you have to understand, assignments still require the approval of the builder. And if builder does not see an sufficient reason to assign this agreement to a next person, or the next person do not have their paperwork in play, they don't have to approve the assignment. And a lot of time that creates a lot of challenges for every single person. So stay away from them as much as possible. That's my recommendation. Instead of that, there's much better opportunities which come up, and try focusing on those. Then we're gonna go into the next area, unique opportunities. I know this is the area where Joseline and me, we always get to uh, uh, we get a lot of clients. They are looking for the best opportunities. They're looking for something which is 300,000 below market price, this. And this is my 2 sentence for it. Yeah, is it possible to get something 20, 30, 40,000 market price? Absolutely. But if you've been waiting for the last 2, 3 years that you're going to get an amazing opportunity, it's going to land on your lap, I'm sorry, it doesn't happen. Okay.
Yeah.
Very, very rarely you see someone who bought something which was incredible. Most of the time you have to go through the uh, grind, and you have to go through it and so on. But what the next 1 to 2 months are going to present are going to be some of those situations where maybe some people have bought before they sold, and they're desperate and they need to sell it, right? There is going to be people who have done something which they were not supposed to do, that they got hyped up and they bought a property which they don't have the ability to close. Or somebody took a private mortgage and now they're not able to make mortgage payments, and they need to dump that property. And because there is inventory on the market, they might sell it for significantly lower price. That does not define the market. It defines that individual person. And Jocelyn makes fun of me all the time because she's like, how did you snatch that deal? I saw it too, but nobody was able to put it together. It's all about, like, honestly trying. At the end of the day, if you try, like, at least in my practice, about 30 of my offers get lost before something is accepted. And I'm okay with those odds. I know a lot of realtors would be very upset, and it is a lot of work, to be honest with you, but the reward is there. So uh, again, this is where, again, you need to have someone like Jocelyn, who is professional, who can understand your situation and see what they can do.
Yeah.
How do you
On
feel
that
about that?
point, sorry to interrupt. I was gonna say on that point, I really appreciate what you say, because when I sit back and look at what you do, more than just hunt for deals, you're solving problems. A lot of clients who come to me and they say, I want something that's 30% under market value. What I say to them is, maybe don't think about being 30% under market value. Think about people who have problems, who you can present solutions to. So in this case, people who are struggling in this pandemic, we've seen a lot of people with tenant issues. That's a situation, and in most cases, I'm not afraid of those situations because I've learned how to solve them. Those properties where nobody else wanted because there's a tenant who won't leave or a tenant who isn't paying, that is how we get paid. That is how we make money. So instead of thinking about how to steal a deal, if a property is perfect and the owner is happy and the market is perfect, there's no way you can just steal a deal like that. But more than that, look for properties with problems. I know, Farhan, you buy a lot of properties that need renovations, right? So a lot of people will look at this property. I remember the one that I saw, I think you remember it too, the one in Hamilton that was flooded. A lot of the times, like, people will be afraid of approaching something like that. But I know that by buying properties that have these situations, it's not even problems, because they're situations waiting for solutions. So that's kind of how I see it, that instead of looking for a steal, look for a situation that needs a solution.
You're absolutely right. And again, one of the things I have learned from my practices is that the only time you make money is when you buy. When you go to sell a property, you're gonna get the market price, maybe 5, 10,000, or let's say 10, 20,000 up or down, but you're gonna get market price for it. So the opportunity for you is where you have to spend a lot of energy and time is when you are buying. And don't look at what it is, look at what it can be, right? Like what you can turn into. I have seen people who have done such incredible features. Like just to share a story with you guys, I had a client who bought a property in Guelph, Ontario. It was the ugliest looking bungalow you would have ever seen. Okay, and nobody would buy it a couple of years ago. He bought it. I couldn't understand the logic, to be honest with you. But you know what he had done, which a lot of us never thought about, was the fact that he went to city. He spent 2 or 3 days educating himself on zoning, what's happening around it. He severed 3 lots, and each lot he sold almost 100,000 more than what he bought that bungalow for. It was a big lot where the severance was possible, and not a lot of people looked into that option. And the listing agent never bothered to do his homework. They listed it just like a regular bungalow with no possibilities. And this client of mine made a lot of money from that project. So there's opportunities like that all over the place. It's just on how you're going to see them. And more than anything else, uh, it's basically your willingness to do things which other people are not willing to do is what's going to yield a much higher result for you. Now, that basically concludes my presentation. Again, if you are having any of the challenge in terms of rising rates, which are causing issues in terms of your financials history and so on, I do encourage you to reach out. There is multiple solutions. And I want to bring Joseline in for her final thoughts before we take over any questions.
Thank you very much for the presentation, Farhan. I think that what you said is I love, like, when I listen to you talk, it just gives me a different perspective. So I'm so happy that I got to listen to you today. And a lot of what you shared is actually interesting. All those changes that are coming, it's good to think about those before they even happen, because then we can put ourselves in a position where we can prepare to take advantage of those situations or take action before those changes actually arrive. So I do appreciate you being here tonight. I have a few questions that people have been asking, so I'm just gonna bombard you with questions. We probably have Technically, we have 1 minute, but I think we can steal 2 more minutes.
That's okay. If you're okay with
Yeah,
Jocelyn, we can go a little bit longer. We'll conclude the
yeah,
seminar, the webinar, but after
yeah,
that, we'll go into questions and let's spend maybe half an hour going over those questions. And if people they want to stay, most welcome. You are very welcome to stay. And if you want to
absolutely.
leave, thank you so much for being with us this evening. Um, it's always an honor to listen to Jocelyn. And you say that you learn from me, but every time I speak with you, I learn so much from you. And it's just unbelievable from where you have started and where you have gone. And it's a privilege to see that journey. And where you are
Thank you.
going even makes me so excited that I get to do things like I'm like, I have to think like Jocelyn. She's thinking way bigger picture than any of us. So it's always pleasure speaking to you.
Thank you. Thank you. And to everyone who's on this webinar tonight, thank you very much for attending. This webinar was being recorded, so we will share the recording in the next day or two once we have it back from our team. So if there's any questions, put them in the chat box. We'll continue answering questions that were submitted before the webinar, as well as those that were submitted during the webinar. And if you'd like to connect with Farhan, please let me know. Most people here have my contact information. If not, I'm just going to put my contact information in the chat box. If you'd like to connect with Farhan to kind of take a look at your individual situation, that is something that can also be arranged. So thank you again for being here. And now we're going to dive into questions. So the first question that I have here is a question about down payment. The question is, do you recommend doing a 20% down payment? And I think there's also a B to that is, does a higher down payment mean that you can get a lower rate?
Yes and no.
Okay.
I wish there was a straight answer to it.
Yeah.
Do I recommend doing 20% down payment? Absolutely 100%. It makes no sense financially speaking to
Yeah.
go for a mortgage which is insured, where you pay CMHC or premium. You also have 25-year amortization, so your monthly payments are higher. Now, depending on a person's situation, that changes, right? For example, I have a couple who came into my office a week ago and we were having a chat, and they have 20% down payment, but they're also expecting. So
Yeah.
the plan I made with them was, let's put 10% down on this property and you keep your 10%. Yes, you're gonna pay more money, but being a father, I know how expensive it is to have children and how many unexpected things do come up when you have kids. And if your wife has to stay back an extra 6 months to take time off to take care of the kid, or the husband has to stay back an extra 6 months to take care of the kid, I want to make sure that you guys are in a position to do that. And yes, that money is not going to like it's going to be sitting in your bank account and you're not going to make a lot of money. But right now, what's important in their situation is that they need to have a bigger emergency pool. Now, if 20 similarly, like I had a 24-year-old kid came who has saved 20% down payment. Again, it's not impossible. I have seen especially young people. I'm so proud of them because number one, they have a lot less bad habits than my generation and generation older than my generation. And I'm seeing them with much more more due diligence what they do before they go and buy versus what my generation did or the generation older than me did. And this guy came in and he had 20% down payment, and I encouraged him. I'm like, put all the money down. In fact, his parents are willing to help him a little bit more. He's going to be doing close to 40% down payment on his first condo. It's just going to give him such a big head start in life where, his monthly payment is going to be very little. And I set up a game plan for him that, you need to start saving money immediately so you can go and buy one more condo in 1 year. And based on where his cash flows are with that higher down payment, with the money he has and the money his parents are giving him, he will be able to more than likely save for one more down payment in less than a year. So
Wow.
there is a lot of people who are able to get onto that path, the thing which I encourage is, if you can, try to pay off your primary residence quickly. Your rental properties can have all the mortgages. They can.
Yeah.
But at least your principal residence, try to clear it off. It takes away a lot of burden from your mind, and it opens up opportunities which you don't see. And financially, it's not the best advice, but emotionally, it gives you a lot of strength.
Absolutely. Absolutely. I like that. And I think I can also relate to that because we've had some clients who we've put on a path. We have people who came to us a year ago, 2 years ago, wanting to get on a path to buy multiple properties. And I've seen you sit down and strategize with them, where it's like, okay, instead of thinking about 10 properties, let's just think about the next one. And I've seen you put them on a path. And I know a lot of young people actually who I'm very proud of what they've achieved in the last 2 years. Now, the next question is, I think, more subjective, and I think it would depend on the individual situation, but I'll just ask you anyway. It says, what would it take to own a property in GTA?
Depends. Honestly,
Yeah.
like, I have a very good friend of mine, a real estate agent, who has a townhouse in Mississauga at the moment, which is under $800,000. Okay, so
Mhm.
imagine if you're making $100,000 and you have 5% down payment on the first 500 and bit higher than that on the other 300. All you need is 25 plus 30, $55,000 down payment to buy that townhouse.
Yeah.
um, and you can get into that, right? Similarly, I have had one of my client who reached out to me a couple of weeks ago. His daughter, she got a job and they needed to buy. She bought a bachelor apartment in downtown Toronto for $430,000. That's all she needs at the moment, right? And her down payment, but by the way, was $20,000. Okay.
Wow.
So you can get into property fairly easy if you want to. The challenge I see is the desire of the people. Like, and Jocelyn, you can back this up. They make little money, but they want to live like, they make millions.
Yeah.
The reality is, I deal with a lot of very wealthy clients who have very high net worth. You meet with them, you sit down with them, you go to their home, you sit in their car. They would look like, it's not that they have, bad homes or they have really, really old cars. No, but I don't see them buying brand new cars. They buy, year or 2 year old car, which is reliable, but they can
Yeah.
drive. They live in very, very normal homes, nothing extra out of ordinary. And you take a look into their net worth and you go, holy crap, this person is worth this much money. That's
Yeah.
generally what I have seen, especially clients of mine which are worth 10 million or more. They live such a simple life. Now, if you're a billionaire, it's a completely different story. But people who have between, I would say, about 5 million to 50 to $100 million, most of them live a very normal lifestyle. And they are in between us, and we just can't
We
tell.
don't know.
We don't know. And
Yeah.
suddenly, when you see a lot of time flashy cars, big homes, the first thing which comes to my mind is a lot of death, because that's what
Yeah.
generally is. uh, I had a client walk into my office few days ago, and they have a car with $2,200 a month payment, and he can't figure out
Wow.
why he can't buy a home. And
Yeah, that's expensive. That's a mortgage almost. That's a mortgage.
it's more than a mortgage, if you ask me, right? But that,
Yeah.
you might think that's uncommon. That's very, very common. You see people's financials, and they have their furniture is on loan, their TV is on their loan, even their shoes. Like, I had a client telling me that they got these really fancy shoes, and it's in 4 payments. It's buy now, pay later, and that culture is stupid. It doesn't make
Yeah.
any sense to me. So if you really wanna buy a home in GTA, right? It's not that difficult. Again, is it as easy as it was 20 years ago? Absolutely not. 100% it's more difficult. But also today we have one of the craziest job opportunities out there. I get to see job letters from people making 300, 400, $500,000 a year. That wasn't the case 10 years ago. So there is a lot of employer which are paying a lot of extra money. Also, what I'm seeing is people are doing side hustles a lot more. People who are really serious, on top of their job, they are having something on the side where they are generating significant amount of cash flow. So I don't know what your situation is. I don't know how much down payment you have, what your income is. But if you do reach out, we'll try our level best to put a plan in place for you so you can buy a property in GTA.
Yeah. Thank you very much for that, Farhan. We have a few more questions that are very specific,
Sure.
but I'll ask you one more that I think we probably should comment on, because I know we've had this conversation before. All the other questions that we didn't get to, we'll reach out to you and answer them in like one-on-one, because I think they're very specific to your situation, and I think we would need more details to speak to that. Now, the one more question that I'm going to ask is, I know you have kids. Can you speak to parents who are thinking to do something to set up their kids?
Don't.
Okay, that's not
Okay.
what I expected.
I
Yeah,
will share a quick example with you.
yeah,
So 3 years ago, two of my really dear clients reached out to me. Their situations were exactly the same. One was a really, really wealthy client of mine, is worth millions of dollars. His son had a baby, and he had racked up some debt, and he was in need of borrowing money. Um, so the father called me, and especially if you are, from Asian culture or brown parents, they control everything, even if you have kids. So he called me, and his thing was this: give my son a mortgage at a really, really high interest rate to make sure he feels the pain and he never does it. This was the rich guy. Okay.
wow.
And he was like, make sure that he feels the pain, that he cannot do this again. Now, to be fair, I really felt bad, and I really took the son's side. I'm like, this dad is horrible, he does not know what the hell he's doing. That was my mindset 3 years ago, right? I'm like, his son can qualify for a really cheap mortgage, he's asking him to go and get a higher rate mortgage and this and that. But he did. He took up much higher rate mortgage at very aggressive payments level. And I saw this kid driving Uber, doing skip the dishes, taking an extra job, and whatever he had to do in 12 months, he cleared off the loan. The other dad, which I saw, same situation, came to my office and told me that his son has gotten himself in trouble, um, made some bad financial choices, and we need to clear up his, $80,000-$90,000 debt. Instead of his passing the responsibility to his son, he refinanced his home, paid off all the debts of his kid, and got him free and clear. The first kid owns 4 rental properties now, and the second person still haven't saved a penny for his home.
Yeah.
I completely get it that buying a home for a young kid has gotten much, much more difficult, and parents need to help them, and also parents need to save money to help their kids. But the best help you can do is show them instead of giving them something. um, every time I don't feel like answering my phone, and trust me, it happens a lot. I do end up getting, Jocelyn is a witness to it. It's like sometimes 700, sometimes 800, sometimes 1,000 calls a day, right? The thing which gives me the most motivation is I think of those days when I did not have a house to rent, or I did not have a place to stay in. So I had to to sleep all night sitting on a Tim Horton desk, right? It gives me that encouragement. Hard times, as difficult as they are and as painful they are, as they will make your kids. So don't give them anything for free, because they won't have no value for it. Do not make a mistake of buying your kids a home. I have seen example after example after example of disastrous results. If you wanna truly, truly help your kids, set up a game plan with them. Hey, kid, you wanna save, if you wanna buy a home, save 20,000, I'll give you 20,000. Let's go into the home and buy it 50-50. Do not give them anything for free, because I know we all love our kids, and being a father, I don't want my kids to suffer at all. But the reality is they're not going to grow if they suffer, if they don't suffer. And that's my take. Don't set your financial goals. Your kids will be taken care of automatically seeing you succeed.
Absolutely. And I do agree with that. And in agreement to that, I also kind of remember where I came from and where a lot of successful people we know came from. They've had to build everything and build their way up. So I do agree with you that education to the kids is probably worth more than just handing them cash.
Yeah. And
Yeah.
kids learn a lot more from what you do versus what you say. I'm
Yeah.
I'm the most guiltiest person in that. My daughter was asking me question, Baba, do you love money more or do you love me more this afternoon? She's 6 years old, right? So it's very difficult to answer those questions. And
Yeah.
obviously, as parents, we don't want them to go through any of the pain or the circumstances we have seen. Uh,
Yeah.
but some stuff is required.
Yeah. You're right. Well, I can sit here and talk to you all night talking about this topic and listening to you give advice. Like, that's something that we can do. However, I'm just realizing that 7:15, we probably should cut it short. Thank you to everyone who's here. I hope that your questions were answered. I know we have questions that we haven't gotten to. We'll get to those in the coming days. If you'd like to meet with Farhan, please let me know. My contact information is in the chat box and we'll be happy to arrange that. Farhan, thank you so much for coming, for doing this webinar. We have 2 more webinars coming that I think the topics are very exciting. One of them is what Farhan, you mentioned about the change in foreign buyer tax, that increased from 15% to 20%. And we were also talking about having a webinar to highlight some of the areas where investors are getting a better cash flow. So that's a webinar that we'll put together as well. Watch out in your emails. We'll send out all the details as they unfold. For now, thank you very much for coming, and I hope you have a great evening.
Thank you, Joseline. Thank you so much and have a good night. Bye.
Thank you. Good night. Bye.